Welcome back, traders. If you follow my updates, you know we don't guess, we track the smart money using the X-Ray Trader playbook. Here is exactly what the institutions are doing in gold right now, and exactly when we are going to strike on Monday. The description, the data gap, and the floating market. Right now, the gold market is in a prolonged exhaustion phase. Based on our last confirmed CME data from April 1st, the market has gone completely dead. Both volume and open interest were consistently dropping. What does this mean? The institutions went to sleep. The recent downward drop you are seeing is what we call a floating downtrend. It is just retail traders pushing the price around weightlessly. The candlestick trap. Look at Thursday's daily candle. It's a red candle with a long lower wick. 90% of retail traders are going to look at that wick, call it a bullish hammer, and assume it's a rock-solid floor. Do not fall for this trap. Because our latest data proves this formed during exhaustion, falling OI, it is a hollow floor. There was zero institutional money backing it up. The guide, How We Trade Monday, April 6th, our official bias, bullish pullback. What does this mean? The downward move is completely out of fuel. It isn't dropping because of aggressive institutional shorting, it's dropping because it's starved of volume. This weak, hollow downtrend is going to stall out, and we are looking to buy the bounce back up. Critical note, we have no new CME data on Monday, April 6th. The next CME update drops on April 7th. Therefore, we are completely locked into our exhaustion bias from April 1st. Here is your step-by-step execution guide and exact entry timing for Monday. Step 1. Do not buy the Asian, London Open. Because that lower wick is a hollow trap, do not blindly jump into buy positions the second the markets open. If you buy too early during these lower volume sessions, you risk falling straight through that hollow floor. Let the retail sellers exhaust themselves. Step 2. Target entry, the New York, NY, Open. We are timing our entry specifically around the NY Open. Why? Because a dying, exhausted market needs an injection of massive liquidity to reverse, and the NY session is when the US, smart money, steps onto the floor. Step 3. Wait for price action confirmation, no live CME data. Because the CME data won't update until Tuesday, April 7th, we cannot watch volume and OI live on Monday. Instead, rely on our locked-in April 1st bias and watch price action closely at the NY Open. Do not buy before the bell. Wait for the NY session to open, inject volatility, and show us a strong bullish structural shift or aggressive rejection off the lows. Once NY price action confirms the reversal is starting, that is your undeniable signal to execute your buy. Trader's summary. The downtrend is fake and dying, based on our April 1st data. We won't get new data until April 7th, so we are trusting the bias. We are looking for longs. Keep your powder dry during Asia and London, wait for the NY Open to bring the real volume, and let's catch this bounce together.